Hey YouTube, welcome back to another episode of the Fire Grind. On today's episode, we'll be going over what happened in the markets for the past 2 days, and then we'll be going over a spreadsheet that I created to track my portfolio's performance. Before getting into this video, if you haven't already, click that subscribe button, and if you like this video, smash the like button. Now let's briefly check out how the portfolio is doing. In the portfolio today, we have about $17,980 in it. So it's dropped over the past couple days, and that's due to the coronavirus happening. So let's talk a bit about the coronavirus. So on Monday, global markets took a steep drop as people were anxious about the coronavirus spreading. We can see the Dow Jones dropped about 1.6%, while the S&P and Nasdaq dropped 1.6 and 1.9%. These were fairly large hits, and especially the airlines, they dropped quite a bit, and same with the resorts who have presence in China. Now you're maybe wondering why the rest of the market also tanked. As we can see, China has got a tie to a lot of countries, and if China starts to shut down, then a lot of other countries are also affected. So we can see here, although there are public health concerns, there's also economic impact, and this will be significant according to some analysts. They say that travel in Asia has already slowed down dramatically, and in turn this also affects supply chain, which could be disruptive, for example, for auto parts that are delivered from China. So some of these shipments might not be able to go, and not only does China make auto parts, they also do stuff like they make your iPhone, they make all your electronics, they probably make half the stuff that you buy in stores. So this impact will be fairly significant. Going back to the portfolio, although we saw this big dip that happened, we see that today it recovered. So it recovered about 1%, and this is probably due to some earnings that are happening this week, like Apple, Tesla, Amazon, they're all reporting earnings. And as of today, Apple reported stellar earnings after hours. That might pull the market up even further tomorrow. Now we'll jump into my spreadsheet that tracks my portfolio. So here we can see that I've tracked my portfolio and have a couple sheets in this tracker. First we have the dividend tracker sheet here. Then we track the portfolio's overall performance in the next tab. So this goes over all the buys and sells that I've made in the portfolio. And the last two sheets are just used to help calculate all the values that are shown in this current sheet. Now jumping back into the dividend tracker sheet, you can see up here in the top left that the total dividends that I've received since the beginning of this portfolio, which is in the early March of 2018, I've received $87.88. So to most people, that doesn't seem like too much over 9-10 months, but that's not the whole story. If you look to the right, this is how my dividends have grown over the past. Now jumping back to the dividend tracking sheet, you can see in the top left corner the total dividends I received since the beginning of this portfolio, and that number is $87.88. Now that may not seem like a lot to most people, but this portfolio is only growing. If you take a look to the right here, you can see how I've tracked my dividends every month and how it's been growing month over month. So I began with 86 cents. Then it grew to $3 and stayed steady for a bit. That's probably because I didn't invest or add in much more money since May 2019 to July 2019. But then it started to grow exponentially as I started to funnel more money into this portfolio. And for the latest month, I received $22.72. And now we're in January, I've received $21.99, and the month of January is almost over. So as you can see, dividends will continue to grow month over month and year over year. I will continue to update the spreadsheet and refer back to it from time to time, and you can see how my dividends are growing. Now let's jump over the portfolio tracking sheet. Here I track all my deposits and the total amount that I've deposited into the account, the month ending cash balance, so this is how much cash I had at the end of the month, and the total value of the stocks at the end of the month. And this column is the total portfolio value at the end of the month. And these three just kind of give you a portfolio split. How much of my money is in dividend stocks, in growth stocks, and in speculative stocks. Now, this won't add up to 100%, and the remaining amount is actually in cash, which I haven't added here. And in these two columns, we can see the gain or the loss that I've had. Now going over to the right side of the chart, I list out all the stocks and I split them into dividend stocks, growth stocks, and penny stocks, or speculative plays. So in my dividend stocks, you can see where I've bought, and I've indicated this by highlighting the box green. So I didn't buy too much in the beginning, and you can see up till July or so, this portfolio is pretty small in terms of dividend stocks. But then I started to buy heavy late into the summer, and especially in October, November, December, I've been adding a lot more to my dividend positions. And to this date, you can see I have quite a number of dividend stocks, probably in the mid-teens or so. Now moving over to growth stocks, again, I didn't invest too much in the beginning, and that just started to grow month over month, and I've started to add to more of my positions here. And as I've highlighted in my last video, you can see Lightspeed, Aritzia, Canada Goose. These are some of the holdings that I added a lot of money into. And last but not least, I have the penny stocks over here. These are stocks that are usually worth very low amounts in maybe the dollars or cents. And these stocks are more speculative long-term plays where I think the business has a potential to go somewhere. And it's fairly cheap now because they're not earning any sort of revenue or making any sort of net income. So that's why these are more speculative plays. So as you can see the portfolio breakdown, there aren't that many penny stocks in this portfolio, as penny stocks add a lot of risk. So this is kind of what I've had for my spreadsheet tracker, and I'll continue to update it. As you see, I haven't quite completed it all. I still have to add the average cost, which I'll be pulling for Wealthsimple, and also this will determine the principal amount that I've deposited into it. And then later on, I'll also add a column that shows if I'm up or down on that stock. And the price at the end of the month, I use a neat little trick where I pull from Google Finance the current price at the end of the day. So I hope you've enjoyed looking at my spreadsheet, and if you want to know any more tips and tricks, feel free to comment down below. So I hope you've learned something about tracking your portfolio's performance. So if you want me to share my template, please leave a comment down below and I'll get back to you on that one. Now keep up the grind and have a great day.